Welcome to AML classes. What is compliance? Compliance in banking refers to the process of ensuring that financial institutions, such as banks, adhere to the rules, regulations, and laws set forth by relevant governing bodies and regulatory authorities. The main objective of banking compliance is to promote the integrity, stability, and transparency of the financial system while protecting customers, investors, and the public from potential risks and misconduct within the industry. Key aspects of compliance in banking include regulatory compliance. Banks must comply with a wide range of laws and regulations at both the national and international levels. These may include anti-money laundering, AML, laws, Know Your Customer, KYC, regulations, consumer protection laws, data privacy regulations, and more. Anti-money laundering, AML, and counter-terrorist financing, CTF, AML and CTF compliance aim to prevent banks from being used to facilitate illegal financial activities, such as money laundering and financing terrorism. Banks must conduct due diligence on customers and report suspicious transactions to relevant authorities. Know Your Customer, KYC. KYC regulations are designed to ensure that banks know their customers and understand the source of their funds. Banks are required to collect information about their customers, such as their identity, address, and source of funds. Risk management. Compliance departments in banks work to identify, assess, and mitigate various risks, such as operational, credit, market, and reputational risks. Implementing risk management procedures is crucial to maintain the stability of the bank and safeguard its customers' assets. Internal policies and procedures. Banks establish their own internal policies and procedures to align with regulatory requirements and ensure consistent and ethical practices throughout the organization. Compliance officers monitor adherence to these policies. Reporting and documentation. Banks must submit regular reports to regulatory authorities to demonstrate their compliance with various rules and regulations. Documentation of all activities and transactions is essential to provide transparency and facilitate audits if necessary. Monitoring and training. Regular monitoring of employees' actions and transactions helps to identify any potential violations. Compliance training programs ensure that employees are aware of the latest regulatory changes and understand their responsibilities. Consumer protection. Compliance also involves ensuring that banks treat customers fairly and transparently, provide clear information about products and services, and resolve customer complaints promptly. Data privacy. Banks are required to protect the privacy of their customers' data. This includes ensuring that customer data is secure and that it is only used for legitimate purposes. Non-compliance with banking regulations can result in severe penalties, fines, damage to a bank's reputation, and even criminal charges. As a result, banking compliance is a critical aspect of the financial industry, and banks dedicate significant resources to ensure they meet all the necessary requirements. Thanks for watching.